Hey guys, welcome to Stock Talk on July 25th. Now we're going to get straight into the markets right now, looking at SPY, the S&P 500 on the 180-day chart. Now yesterday we changed the outlook just a tad bit, really didn't change that much, but I said I expected some fluctuations within the markets. However, the markets said, okay, we're going to actually have the effortless leg up today, and you guys can see what happened intraday on SPY. You guys can see that we head towards 284, and as a matter of fact, we hit a resistance right at the light blue line around 283.90, which is the precise number that I was looking for. We went over it, but you guys can see that we did sell off. Now, there was a couple of big factors that was happening. If you guys were paying attention to the markets today, we started the day with another divergence in the major indices. We had the NASDAQ this time pulling us higher, while the Dow Jones was actually struggling to maintain, it was kind of leveling itself in the negative area before it managed to pull up with the NASDAQ. This was in contrast to yesterday, if you guys remember, in which the Dow Jones was the strong indices, but the NASDAQ was tailoring behind. So what does that all mean? You guys can see that today a lot of things happened. We are in the middle of heavy earnings season. We expect fluctuations, and of course we have news items that may prompt moves up or down, which is exactly what we saw today. So this leg up at the very end was propagated by the The European trade deal that was made, and you guys can see that we managed to, pull significantly above the resistance. Actually, you guys can see that, but this was a spike over the resistance. And when there's a spike over the resistance, generally speaking, that could be almost like a false breakout, and therefore you guys can see that we did manage to kind of retrace back, and now we reconfirm this area as a possible resistance area around 283.90. I want you guys to take you to the 1-year, 1-day chart, because even though we said that there might be fluctuations or there was an effortless leg up, regardless, we said what? The one thing that has been consistent was that the markets were in a bullish state. It was a matter of not if, but when we would get to the resistance area, and that when was actually today. So you guys can see that there was a possibility of filling this gap. We never did fill this gap around 280.50. I was looking for a possible support should we come down. We formed a very nice candle to the upside. So what does this tell us for the markets? Well, the markets is telling us that it's obviously bullish. Do we have a sign of reversal just yet? And the answer has to be no. Are we at the resistance? Yes, we are at the resistance, but we don't have any signs of a reversal. Yes, we closed right at the resistance, but we need to see what happens tomorrow upon trading day. Are we going to consolidate sideways, or are we going to start selling off? That is the big question, and that is, you guys can see that if we do keep going higher, which is hard to imagine, I can imagine us pushing slightly higher than this area, but not significantly higher, because you can imagine this is the first time that we've tested this area, and we're pretty much right at it. So I do expect some sort of retracement back, but we'll explore that when we get to it. But all we can say right now is we are in fact at the resistance area. Now I want you guys to take a look at the NASDAQ. So I'm going to show you guys the NASDAQ futures really quick. Look at intraday NASDAQ. So here was the news propagated the massive spike up that the trade deal was done. But then look at this drop. This drop was kind of initiated by the Facebook earnings. Now, Facebook obviously didn't meet its earnings, or investors didn't like what they were seeing, and you guys can see that we managed to, this pulled the NASDAQ down, gave away most of its gains and more from the news item, and then we've kind of recovered back to where we started. So, and I want to show you guys one quick thing on Facebook. All right, so here's Facebook right at 170. Whoa, 178. So I was looking at this earlier today. It was stabilizing at 198, and it's at 178. So that is actually really interesting, because now we're looking at Facebook right now, right? Recall what happened to Netflix, okay? You guys, was fresh in your mind. Wasn't it last week or 2 weeks ago? Netflix earnings, it came down, it recovered. I'm not saying that it's a great buy, but what I'm saying is look for possible support levels at around 187. Now, I know 180 actually, $180. Now, you guys can imagine this is the the 50 SMA line, which has acted as a support in the past, and that it's not unusual to dip under. You guys can see that Facebook has dipped under in the past. So that it could provide a good buying opportunity. But one thing you want to notice is you guys can see how Facebook consolidated at least 2 weeks down here on the bottom. All right, right now we're at 180, it seems like. Let me take a look really quick at level 173. So we're looking at 173.90. And you guys can imagine futures are not even open right now, but that's going to plummet. 173.90. So we are right here. So we're dipping a little below the what? The blue line. That's perfectly normal, as you guys can see, and I do expect Facebook to recover. It's just a matter of time. Let's take a look. Now this looks much better. You guys can see that the support is around 173.44. What chart am I pulling up? This is actually the 10-year monthly chart, and you guys can imagine the 20 EMA's lines right here. We tested it here, tested it here, tested it here, and finally we're back here. Now I'm going to do something just to see where. Oh, this is actually becoming really interesting. Okay, let's see, 170. All right, yeah, this is becoming really interesting right now because Facebook is beginning to look like a nice trade. Now, of course, let this drop. We're not going to go into a falling knife. However, this is looking nice on the monthly chart, at least, in that we are at the 20 EMA now. This is a pretty nice retracement, I think, back to the 20 EMA, but this is a big drop. So I would wait for, a couple of days, maybe one day, just to see what happens for Facebook to stabilize a little bit. I don't expect a massive recovery. I do expect a little bit of recovery back up, but certainly I don't think, back to the 200 level. That's not going to be a very quick strike. Let's take a look at Facebook really quick. Yep. Okay. So actually, now I'm curious. Whoa! Can you guys see this? This is NASDAQ, the triple Qs, and whoa! And so you guys can imagine when the futures do open in around 20 minutes, and by the time this video is posted, we would have NASDAQ significantly lower at that point. Pretty much the triple Qs gave up all of its gains made today just from the Facebook drop. Yikes! That is, a little interesting. All right, let's take a look at TVIX, but before we do, I want to thank everyone for watching these videos. Commenting on all of your videos on the YouTube, and be sure to hit that like button. Thank you for smashing that like button yesterday. Keep doing that. All you have to do is hit that click or hit that tap on the like button if you do find these videos beneficial. I love doing these videos, like I always say, for you guys. So I'm keeping it up. Hopefully you guys keep it up and just type that like button. And if you have not, be sure to subscribe to this channel, or go to the Facebook group, or do both. That's fantastic, just to keep it up. TVIX. Volatility. So here we go. Love volatility. Let's see what price it's currently trading. $36.10. So we do see a small spike. Now what was interesting was, if you guys were paying attention to volatility, here's when the news came out about the trade deal. The markets soared. What did volatility do? It barely dropped. Was this surprising? I thought that was quite surprising. It shows that there is something unusual going on, and that unusualness could be attributed to that SPY is at the resistance area. And because people expect that this is the first time at the resistance, people are expecting some sort of leg down. And therefore, you guys, that could be one reason why. Of course, the second reason could be based off of news, but that's why we kind of held up pretty well. And I was really surprised that this was happening. Given that all the markets were pulling significantly higher. All right, let's take a look at crude oil /CL. Crude oil. So crude oil was actually quite bullish today, but really it does not take the bearish pattern off the table because we're looking at the 1-year chart for crude oil. Let's take level 2 off, and you guys can see that this could still very well be, we're right at the 20 EMA, a bear flag formation in the making, and that would require either tomorrow to go sideways or tomorrow to kind of drop, but we'll see what happens. But certainly as we near this 20 EMA line, not something that I would actively participate, in my opinion. If you guys were in crude oil, I think that means you're good, but now it's getting risky. It's getting very risky, so you want to allocate your risk. You guys can see this orange line, which is the 150 simple moving average, and you guys can see that we didn't really test this time, and therefore there could be another move to the downside for crude oil before recovering. Regardless, our overall trajectory for crude oil still looks good. Of course, we haven't had the downside yet, if we do have one this week, but you guys can imagine that here's the 20 EMA line. There's a possibility of going to 76.30 or 76.40, but right now it looks good that we're keeping over the 20 EMA. Will we continue that bear flag pattern in the short term? We'll have to just watch and see what happens for that. All right, let's take a look at nat gas. So for natural gas on the 180-day chart, I was looking for a confirmation of the 20 EMA. Now there's a couple of things that's kind of interesting right now. For natural gas, one thing to note is tomorrow is the natural gas inventory report. So here we are right here. We're overextended over the 20 EMA. We kind of confirmed the 20 EMA here. You guys can see we kind of touched it, but there needs to be, in my opinion, there needs to be a leg down and confirm the 20 EMA again. Now, if natural gas is able to do that once again, I'm more inclined to get into UGAZ, which is the ticker that follows natural gas. But for now, you guys can see that this has been a resistance. We kind of closed above the resistance. That's actually a pretty positive sign. Can you guys see? We're actually right at the resistance. So let's just say that this is right at the resistance. Actually, this is right at the resistance. Incredible. So you guys can see what markets are attracted to, right? What are markets attracted to? So we said this over and over again. Markets are attracted to previous support or resistance areas. So you guys can see that this was a resistance area. We got retracted and sucked up right to the resistance area where we closed at. So in my opinion, natural gas is looking good, double bottom, but inventory reports are coming out. I'll let that settle, let that wind catch its sail, and then if we manage to form a tail candle and bounce off, those are certainly positive signs for nat gas. So be on the lookout for that. Gold. Okay, so here's gold. Gold looking at a support around 1210, but it's fluctuating in the middle. Regardless, we did see JNUG, which follows gold, doing quite well today. We actually saw JNUG pulling over $13 and keeping over $13. So here's JNUG right here. You guys can see how we broke over and started over the resistance area. Can you guys see that? That is, again, a pretty solid sign for gold. Gold looks like it's beginning on an uptrend for JNUG at least. 4/GC is correlating slightly up, but it's really in the middle, a horizontal pattern right now. That's really not telling much of a story, but JNUG is certainly telling a better story, and therefore, again, if you wanted to take a position in gold, especially if you guys got in when it was at the support, you guys are comfortable, right? Because it hopped over the support resistance area and you're good to go. But 4/GC is another one that I'm closely watching, as this is, you guys can see that we have a resistance kind of close up here, but we're on a horizontal trajectory, a higher low in the near term, and therefore something to watch. Again, very interesting commodities. Okay, yeah, that covers the commodities, so let's take a look at all of your comments. Hello, Rizwan. Making more money shorting than going long. Good. So, guys, if you guys are making money, keep doing whatever you're doing, right? You guys can listen to these videos and take some pointers if you want to, but it's all up to you guys. And if you guys can make money shorting in this market, by all means, do what you do best. So congratulations, Rizwan. Good job. And you're looking on SKX. What is my opinion on SKX? So SKX, you guys can see this is Skechers, and Skechers, whoa, earnings again. This is propagated by earnings, and now it's going down. Support around this area. So one thing that you did is, if you were short before the earnings, you took a good gamble, in my opinion, in that you guys can see that we're at the 20 EMA. This was the decision point, right? The decision point said what? Well, on the weekly chart, we actually managed to come down, and now, what is this pattern? It's a pattern of active decline. As a matter of fact, we can probably see a slight recovery back to the 20 EMA before another possible leg towards the downside. So you guys can imagine, this is a what? This is a bear flag pattern. This is actually a very steep bear flag pattern in the making. And therefore, yes, we do have kind of a support around 24.51, but this is on an active decline. So as long as you are comfortable with knowing where your stop loss is, then I think you're good, because this is on a declining formation. All right, good job with that one, Rizwan. Also, can you look at Facebook holding long-term? Yeah, we looked at Facebook, and now I'm curious, because I'm curious where Facebook is right now. So let's take a look at the 1-minute chart. And oh my, let's revisit at the end of the video. Okay, so Rizwan, let's see what MU does. Yeah, so MU has been kind of at the support, which is perfectly normal, I think, in my opinion. Nothing wrong with MU and its pattern. So if you guys are curious, let me just show you MU. This is Micron Technology. So here we go. And you guys can see as Facebook is selling off, we have these tech stocks that are selling off, Micron Technology as well. So let's actually see, what price is Micron at right now? It's around 53.12. And 180-day chart, you guys can see that. Okay. If this will load, but maybe this won't load. In the meantime, let me take a look at some other tickers if this won't load. Oh, there it is. So you guys can see that we're at 53.12. I think it can fall a little more and then consolidate for a couple of days. At the very least, I would like to see that on this stock. So I think there's potential for it to fall just a tad bit before any move to the upside. So, all right. Especially, you guys can see the MACD down here. The MACD is actually pointing to a sell signal too, which is interesting. OZK, K9. All right. OZK. Oh. Are you shorting this one? Okay. So here's OZK, or Bank of Ozarks. We're looking at the 3-year weekly candle chart, and you guys can see that we've held the 200 period moving average until we started breaking down. And you guys can see that we actually broke down below the major support line. This is certainly not a good one to hold long, as this is on an active decline and there is no sign of a reversal. Our next support would be around 36.64, but until then, until there's some sort of sign of a reversal, remember, we don't have to grab it at the very bottom. Any of these stocks, we don't have to grab it at the very bottom. We just need to grab it when it starts reversing. And chances are, if you try to guess the bottom, you're going to guess wrong. That's just how it is. The markets love to trick people. And if you try to guess the bottom, you might get it 1 out of 10 times or 1 out of 5 times. But even I can say 1 out of 5 times is really lucky. So, all right. Eric, you're having fun. Thank you for watching this video. It's good that you're having fun in these videos. So, DRIP. So a lot of you guys are talking about DRIP, including Rico, and I think some other people. So DRIP. You guys can see the one thing about DRIP is it's been at a bottom right now, but there's really, you guys can see this, how volume's kind of dying down. It's kind of getting wedged in by this descending trajectory, and because can see this bottom down here. It's just nothing that's really appealing right now. Sure, I think in a few months there might be the possible leg up. There's certainly, DRIP certainly has quite a bit to recover. It should start going up. But right now, as the volume's dying, as you guys can imagine, if crude oil does have that leg up, we do see Gush possibly going even higher. Then it's just until then that happens, when if crude oil does reach that magical number, the 10-year resistance, then we can reevaluate crude oil and DRIP at that time. But right now it's just kind of getting wedged in, and the potential for profit versus potential and risk is just too little at that point. So let's revisit that in a couple more weeks as crude oil starts moving. Okay, BVN, Ven. Thank you for your comment for BVN. Am I typing this wrong? Yes, I am. All right, BV. Oh, okay. So BVN, when is earnings, guys? So earnings is on, was it today? Let's take a look at that. So BVN earnings, so earnings that went up a little bit, didn't really react that much, which is all right to me. Okay, so BVN is one that is looking a little more enticing. The one thing about this, let's just go back really quick. Let's look at the 3-year chart. The one thing about this is we did pull a nice candle here. I do like that candle. Is this an active support? That is questionable. It could be, but the problem is you guys can see that even though this was a support, we dipped slightly under the support, but we managed to come back up. So there's a couple of scenarios right here. Let's take a look back at the 1-year chart. So you guys can see on the 1-year chart, when we start moving higher, right? You guys can see that when we start moving higher after a sell-off, we do want to see it move over the light blue line or the 20 EMA. So that's the first thing I want to see. Right now, what happened, we closed pretty much right at the 20 EMA. So I would like to wait for tomorrow and perhaps another day to kind of see and gauge what the market thinks of the earnings. You guys can see that when we're near the top, we do sell off after earnings. Here, we were near the top, we did end up selling off. Here, you guys can see that we were near the top, we ended up selling off. So every time we've had earnings, we've kind of sold off. But of course, we were near the top of the trajectory. Right now, we're kind of near the top. You guys can see we're at the top of the 20 EMA. We could have a sell-off in the next few days. So I just want to place caution if you're looking at this one. But thanks for the ticker. AMD, oh, hey. AMD. All right. So this is one that I talked about on the Facebook page as well. I was like, watch for AMD. And you guys can see AMD. Here we are. Actually, this is interesting. Let me see. What price is it at? $16.87. So you guys can see that AMD went up. But one thing to keep in mind is, first of all, the 3-year resistance, actually, let me just take you to the 1-year resistance. Can you guys see this double peak, which is very obvious? 1734. We actually went to 1733. Can you guys see that? And we got rejected off of that. Okay, doesn't mean that it's a triple peak. It's going to have to come down. Certainly doesn't have to do that. But can you guys imagine? Is this a safe play for a long trade or a short trade? Just think. You buy in right now. What are the chances? And just give yourself, ask this question. What are your chances? What are your chances that you'll make money if you buy in right here? You guys want me to make that square? I think you guys do. What are the chances that you will start making money above here? Okay, there's a chance, yeah, sure, but the chances aren't in your favor. That's the thing. What are the chances that if you do a short, and not saying that you should do a short, but what are the chances if you do a short that you'll make money? Okay, so I just want to give you guys that scenario, and this is why, my trajectory or my thoughts about AMD really hasn't changed in the past few months. In that when we broke above, we expect, here we go, the 20 EMA to be acting as a support, and we are at the 20 EMA. Here's at the 20 EMA on the 3-year chart. There's significantly lower prices for AMD to drop. If it wanted to, so far it isn't, but if it wanted to, there's certainly a lot of room for AMD to drop, and therefore that's what I'm looking at, because it's kind of overbought, right, guys? All right, drip. Okay, the last. Oh wait. Okay, so all right, we're going to look at HUYA. This is going to be a long video. I can already feel it. All right, so HUYA is one that kind of looks like IQ in a moment, but you guys can see that HUYA is on this pattern of active decline right now, and this really looks a lot like IQ. You guys can see that overall. We're still declining. We're at the 20 EMA, got slightly rejected off of here, and therefore you can imagine that we could still go down. We could certainly go back up and reconfirm the 20 EMA, but this is one that is quite volatile as well, you guys can imagine. So What do I see? Well, we really don't have that much technicals to work with. That's number one. And number two, right now, it is kind of, we managed to pop up just a little bit, but this looks like an active decline, but it's just a hard one to gauge. Can you guys imagine why this one's a hard one to gauge? You guys can see that why this was the resistance area right here. Sure, that's the resistance area, but it's a hard one because given the position that we're in, there's a 50-50 shot, literally speaking, 50-50 shot that it's going to go up or it's going to go down right now. Actually, there's probably a little more preference towards going down, because you guys can see that we've been getting rejected with 20 EMA. But certainly, I think you guys can see here's the 50-50 right here, 50-50 down. So, you know, this is one to watch, but if you want to take that position, you have to do it smartly. And smartly means allocating your money smartly. Will, can we take a look at RUN? So RUN was literally on a run in the past few months. You guys can see this RUN trend. So the one thing about RUN is, remember, what goes up must come down. Has it come down yet? Yes, we've had these bumps, but you guys can imagine. Can you guys see steady, rather steady, rather steady, rather starting the bumps? Now here we go. Here's the bump. So right now it's on a period of active what? Incline. That's a good thing. I like this trend, and you guys can see that we went over the 20 EMA. Certainly a positive sign. I think this is a good one to be watching. If you guys want to take that entry position, I think that is okay. Just to keep in mind that earnings is coming up. Earnings is coming up, and that, whoa, what just happened? And that earnings is coming up, in that we do expect it to move with earnings. So whether, you know, it depends on where we are on the chart when the earnings does come out. But you guys can imagine, look at this staircase pattern, pretty nice, but now we're getting a little bit of choppiness. So I think just be careful in this one. You know, this one, as much as it's gone up, could come down rather quickly as well. But right now it's going up, so good trend. Did I do GE yesterday? I'm not sure, but Joe, let me just do GE one more time. Oh, we did do GE. So I said that, okay, yeah. So the thought about GE yesterday was that you guys can see that we're being wedged in, and wow, look at that, right? We're still down here, so no surprise. So we're getting wedged in. I told you guys what the potential for profit is getting lesser and lesser, and therefore not very interesting one to get in. Let's take a look at Facebook really. Whoa, my. 164. Okay, so you guys can see it's still dropping. 164. Now let's correlate this with this chart right here. We are right here. Pretty reasonable, right? Pretty reasonable. The only thing that's scary is this massive red candle. Let me just draw in this line showing you this is actually a red candle. So Facebook right now, you know, it's actively declining, and we expect the NASDAQ to be dropping. So keep on watch in the next few seconds when the markets start opening again, or the futures start opening again, and I'll just show you guys for kicks and giggles, I guess, on the 1 day 1 minute chart. But thank you guys for watching this video. Like if you like this video, as always, and I will see you guys tomorrow in the next stock talk. So there you go. There's the NASDAQ. There it goes. Wow, so it's dropping 60. Whoa. Okay, well, you guys can monitor that. I'm not gonna put this in the stock talk, but see you guys tomorrow. Have a nice day.